Are you a first-time homebuyer? Then I'm sure you understand just how overwhelming and frustrating the entire process can feel. But it doesn't have to be that way. Just imagine grabbing the keys to your brand new house and walking in with zero financial surprises and zero financial stress. That's totally possible, and it's what we're going to be showing you today. In this video, I'm going to be walking you through step by step the 7 dollar amounts that you absolutely must have if you're purchasing a home in 2025. Here we go. All right, so kicking off this list is number 1. How much money do you need for 6 months of expenses? Forget buying a home, okay? Forget your loan, forget your down payment. Do you have an emergency fund? All right, true story. It was our first summer here, and we got home one day and our house was like 85 degrees. It was steaming hot in here. It turned out our AC was broke. Now, thankfully, we had an emergency fund. All we had to do is give that HVAC technician a call, and he came right on the spot, fixed us up, and we were back to a cool house in a couple of hours. Now, if we didn't have that emergency fund, that could have really set us back. 6 months of expenses, that represents your emergency fund. And what that does is it protects you from the surprises in life, from the unexpected things, and from catastrophes. You're gonna find is that when you have an emergency fund, suddenly a lot of those little problems that used to bother you, your wheels need to be replaced or your car needs some emergency repair, you're gonna notice a lot of those little problems suddenly start to kind of disappear. It's as if life looks at you and says, I don't know, this guy really has his stuff together. Let's not mess with him. Let's go to that other guy over there. He doesn't have an emergency fund. Let's go mess with him. As a matter of fact, I've had my emergency fund now for over 5 years. I've only had to make maybe 5 withdrawals from it. And it is still rocking and rolling to this day. To calculate your emergency fund need, what you need to do is write down all the expenses that you need every month just to get by. Your rent, your food, clothing, healthcare, whatever costs that you need to keep your life going. Once you figure that number out, go ahead and multiply that by 6. Let's say that for you, for example, your monthly expenses is $5,000. You're gonna go ahead and take that $5,000, multiply by 6, and you're gonna get $30,000. That is gonna be your 6-month emergency fund. Check. Number 2, how much money are you gonna set aside for your down payment? Now, your down payment, I don't need to explain that to you. You know what a down payment is. But here's what you might not know. There's 3 different types of loans that are available to most home buyers. There's a FHA loan, there's a conventional loan, and if you're a veteran and you're qualified, there's a VA home loan. The FHA loan allows you to have a minimum of 3.5% down payment if you qualify with a 500 FICO score or higher. A conventional loan typically allows a minimum of 3 to 5% down payment. And then your VA loan allows you to have no money down. That's 0% down. Now, despite these minimums, I highly encourage and recommend my clients to try and aim for 20% down payment. Here is why. Number 1, statistically speaking, the higher down payment that you put on your house, the lower a chance you have on defaulting on that property and foreclosing and losing your home. I don't want that to happen. Let's roll back the clock to 2005, just before the housing market crashed. At that time, the average down payment amount was just 2%. 40% of new first-time home buyers during that time period had 0 money down. Crazy, right? That's what caused the biggest crash in real estate history in recent times. The second reason why I strongly encourage 20% down payment is you get to avoid what's called PMI. PMI is private mortgage insurance. And basically, it's an amount that you pay every month on top of your mortgage. I'm not talking about principal, interest, taxes, and insurance. This is a fifth thing that you pay on top of that. And it could range anywhere from $100 to $200 depending on what the bank calculates. And this amount is not for your benefit, it's for your bank's benefit. Think about it. What could you do with an extra $100 or $200 a month? Third reason why, typically when you put higher amount down on the house, you get better rates. Fourth reason why, you get a lower monthly payment. Fifth reason why, and it's probably not talked about too often, is it makes your offer stand out. It makes your offer strong. Put yourself in the seller's shoes. If I'm a seller's agent and I have two competing offers that are roughly equivalent, I have buyer one that's putting 5% down, and I have buyer two that's putting 20% down. Which one am I going to go with? I'm going to go with buyer two that's putting 20% down. Why? Because I, as a seller, feel that that buyer has their finances situation in order. That buyer has a stronger financial cushion and is more committed into doing this transaction. The more money you bring to the table, the stronger you are, the more you can stand out in a competitive market. That's 5 reasons why I strongly encourage you and all of my clients to aim for that 20%. Number 3, how much money can you set aside for closing costs? This is something that a lot of first-time home buyers aren't really familiar with. On top of your down payment, you also have to bring what's called closing costs. Closing costs they're basically costs to do the deal. And they pay for things like your title fees, your mortgage fees, your commission if you're paying your buyer agent commission. They help cover the expense of the transaction. Typically here in Nevada, that amount can range anywhere from $5,000 to $20,000, $30,000 or more, depending on the price of the transaction, the price of the property. If you'd like to receive a free estimate of how much your closing costs could be here in Nevada, shoot me an email, tell me you want an estimated closing costs, put an address in there of a property if you're looking at a specific property, and I'll get you those estimated closing costs. Again, it's an estimate, okay? Number 4, what is your monthly take-home pay? Monthly take-home pay, okay? It's simple. Let's grab your gross amount of money. Gross, right? Let's grab your gross amount, okay? Then from there, Uncle Sam takes his cut. Social Security deductions, they take their cut. Let's say your gross pay is $10,000. And for simplicity's sake, let's say Uncle Sam takes $2,000 from them. Now you're left with $8,000. Then you got Social Security, you got Medicare, you got all these other deductions. Now you're left with $7,000. On top of that, let's say you're investing in your Roth IRA or Roth 401k or other retirement account. Let's say you're putting 15% into that. That's another 15%. That leaves you with $5,950. That is your take-home pay. Now, if you have a car payment or if you have student loans, make sure you factor that in as well. And if you are investing, definitely continue to invest. Don't touch that percentage. If you're doing 10%, if you're doing 15%, keep rocking and rolling. That's great. You're kicking. Number 5, how much are you willing to pay a month for your mortgage? Got to think about a number that you're comfortable with. Hopefully, you've been working your job for a while, so your income should be somewhat predictable. Or maybe you're self-employed or you run your own business. You should have an idea of how much money you're going to bring in over the course of a year. No one can tell you what this figure is. Now, the bank, of course, they say you qualify for an $800,000 home. They don't mind if you get an $800,000 home. But if that's leaving you with very little money, I mind. I don't want you to be house poor. But generally speaking, the recommended amount is between 20% and 35% of your take-home pay. Any more than that, and you might be stretching your budget a little too thin. Number 6, how much money are you going to set aside for the rest of your life? No, I'm not talking about from now until the end of your life. I'm talking, how much are you going to set aside for things in your life aside from your house? As much as we love our houses, we love our homes, you have other things you want to do. Maybe you have travel plans. Maybe you have, kids events or kids sporting events. Other things that you want your money to help you with. You want your money to go towards investments or other things. The point is, how much money do you want to set aside to spend on things besides your house? To start, all we need to do is take number 4, our monthly take-home pay, and subtract the mortgage that we're willing to spend. And that's going to leave you with your amount that you have for things other than the mortgage. Too easy, right? Number 7. First of all, congratulations. If you've made it this far, you're already 90% ahead of most Americans when it comes to their finances. So good job. Now that we know how much we're comfortable putting away towards the other things in our life, I don't want you to stop there. I want you to go to the next level. And what does that look like? You pay off your mortgage faster. How? Simple. Throw more money at it. So what you need to do is take the amount that you have for the other things in life. Once you figure out what your necessary life expenses are, ask yourself, how much can I take from that bucket every month and put towards the house? Even if it's a small amount, it's going to save you time and money. There's not a lot of things in life that save both. But if you pay towards the mortgage, you'll get exactly that. Do you really want to have to pay a mortgage for 30 years of your life? Think about where you want to be in 30 years. Do you still want to have a mortgage at that time? I don't think so. I don't even want you to have a mortgage in 20 years, let alone 30. I want you to pay off that home as quickly as possible. Hell, I want you to pay it off in 10 years, maybe 5 years. It sounds crazy, but if you really set your heart to it, it's possible. All you need is math. If you'd like to download a copy of this template for free, fill out the form in the link below and you'll receive your free copy within 48 hours. You have a budget, you have a plan. So when you go home shopping, you're gonna enjoy it and you're gonna have a confident experience because you're gonna know your numbers better than 90% of the other buyers out there. If you made it to the end of the video, I gotta give you 2 solid thumbs up. You're somebody that really is doing your homework. You're somebody that you really want to succeed. You really want to do it right. And I commend you. You're the type of client that I love working with because you want to have a plan and you want to succeed. And I can't wait to help you and continue to help you. If you found value in this video, please click the like button, click that subscribe button. I put videos out like this every week. If there's something you'd like me to do or share, please drop a comment below. I look forward to continue serving you and helping you get into the home of your dreams. See you on the next one.